You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. You know what time it is. It is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for the second of the bi-weekly editions of the old Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fun network. Glad to see so many of you are enjoying all the content. If you like what you hear, this program, the entire network, wherever you want to do it, for this, for the network, for a specific show, it's up to you. Head on out to your platform of choice, wherever you get this show, and click on the star rating. And if you want to leave a review, have at it. The more, the merrier out there. All of that helps to continue new folks discovering the program and indeed the network, of which there have been legion these days, but we always like to see more. It always helps. So the more you can get out there, especially in these troubled times, get them to discover this content. We'll keep them informed. We'll keep them engaged, enlightened, hopefully maybe a little bit entertained. We'll try. At the very least, we'll hit them up with a ton of content throughout the week, sometimes a couple of times a day, like today. They're going to be awash in options content. Of course, keep those questions, those comments coming. We do love to hear from you guys. And let's see who we're hearing from on the old show today. First, out to the hinterlands of these fine United States, where once again, we are joined by the anti-clam pirate himself, a.k.a. the rockingest of lobsters, a.k.a. Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Lion Capital. Mr. G, welcome back to the program. How are things in the hinterlands of Maine? Have you guys survived the remnants of the hurricane there, sir?
We did. It was L.O. Bean's power got knocked out, strangely enough, the town of Freeport, but we survived.
That means a state of emergency in Maine, right? If L.O. Bean was without power, that's a state of emergency, right?
It definitely is. I think they're the biggest employer in Maine. If they're not the biggest, they're probably the second or third. So I guess I would say yes, we survived. The Armada was battened down, and I didn't even lose a tree.
Well, there you go. Thank heavens for small favors. Yeah, if people can't make and or buy boots in Maine, it's a state of emergency. Immediate, across the board, federal disaster area over there. Glad to hear things were not so bad. We had your buddy, Mr. Matt, from your neighboring state of New Hampshire over there on yesterday. He said he had a little more issues over there, but it sounds like, all in all, things not too terrible up there with the remnants of the hurricane. Now we move out to the hinterlands of Chicago, where we may have other issues in Chicago. One thing we don't have to worry about really are hurricanes, which is kind of nice, where we are joined once again by the uncleest of Mikes, Mr. Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. Are you enjoying not having to deal with the remnants of the hurricane, sir?
Yeah, and I will say, as the self-appointed head of the elimination of Fox River clam piracy, all is calm on the Fox River right now. No clam pirates to report today.
Glad to see that. We got people like you watching out for us on our nation's interior waterways, which is all we could ask for as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, a lot to parse. Let's get to it, of course, the trading block, the portion of the show. We break down what the heck is going on, what is trading, what is lighting up our screens today, and indeed between our last episode here. And another kind of weird one. It seemed like the street was having a hard time parsing what to make of some understandable missed messages out there. You know, it seemed it was a little bit confusing to start the day. The markets were kind of mixed, and I get it. You know, the numbers were kind of on both sides of the spectrum out there. First of all, we saw initial jobless claims falling quite a bit by about 250,000 to about 1.2 million. That's the lowest level we've seen since all this madness really started unfolding. Economists had been expecting about 1.4 million, so that's probably bullish, right? That's probably not a bad thing. And then yet at the same time, you also see a job cut announcements, which is not a stat I've seen that tracked that widely in the past. That's probably why it comes from an employer firm, so maybe they have a little bit of an axe to grind here. This firm is Challenger Gray and Christmas. Sounds like a name coming out of an old 30s holiday movie. But, they announced that job cuts by U.S.-based employers jumped in July to over 250,000, 262,000, the third largest monthly total ever, up 54%. So initial jobless claims down by 250,000, job cut announcements up by about 250,000. So, how does that all balance out in the end? I think that's what the market was trying to weigh, and it seemed like it was having a hard time for a while there. A lot of the indices were mixed. Now coming into showtime, it seems like we have a bit of a unanimous opinion. Guess who's winning? Yep, it's the bull once again. Most of the major indices up, not a ton, but up slightly. The S&P is up a little over 0.05%, so just north of unched really there. The Dow up about 0.15%, and the NASDAQ leading the charge up almost 0.33%. Our old friend VIX Cash coming into showtime was about 23.5. That puts it down about 1.2 points. Now it's down to about almost exactly 23, so it puts it down about almost 1.75 points out there. VVIX was about 106 and about a half. That puts it down a little over 6 handles, about 6.15 from last show. And our old friend VXX was at about a 27.2, puts it down about 1.3 handles. So our friend out there with the 30-22 put spread in VXX is probably pretty happy. Of course, a lot of other things to parse on the market out there today. We've been talking for a while about that weird bump in VIX futures. It's going back to the beginning of the year. People have been pricing in a little bit of a Rocktober into November time frame over there, where some folks maybe making that bump a little bit starker in relief. There's a quote-unquote bipartisan group. It does sound like a lot of them were pretty anti the Trump administration, but all in all, they did some wargaming for around the election. I love that term, wargaming. It makes it sound so martial. But they role-played a variety of different scenarios, in particular a decisive Biden win, a narrow win for Biden, a close electoral win for Trump, but a 5% popular vote loss for Trump, and a possibility the outcome remains in doubt for weeks because of a deluge of mail-in ballots. And what they found was that regardless of the scenario, pretty much, the conclusions were quote-unquote alarming, and they found substantial risk of legal battles, contested outcome, and violent street clashes, even a constitutional impasse. They worried the winner may not be known even until not just election night, but all the way through to the January 6th inauguration, in which case they foresee just tumultuous street clashes, particularly in that scenario where Trump wins electoral college but loses the popular vote. They see a lot of unrest as a result of that. So I guess if you look at these war games, maybe that VIX bump is not enough out there around the election, because it sounds like they're pricing in, at least here, weeks of uncertainty and turmoil following the election, not just around the election day itself. So a lot of fun stuff to parse. Maybe let's go out to Uncle Mike for a dose of happiness. Uncle Mike, sir, what is lighting up your tape on yet another day when the Perma Bulls are back in charge, sir?
There you go. Many thoughts on what you had mentioned about possible election outcomes. What's interesting about a lot of the scenarios that you mentioned is, let's say that we have kind of a repeat of 2000, to where we didn't know who the president was. We wanted to have recounts, and we had a lot of things going on. With the mail-in ballots, I know that's a hotly contested issue right now, and that everyone has their opinion on it, but regardless of where you stand on that, those are going to take longer to count, and those will lead to a lot of potential uncertainty within the election. If it's close, unless it's a landslide, one side or the other, with Biden or Trump winning, there's going to be a lot going on with that. And there's a lot of states that can be very close with that to where, okay, let's say, for example, like I personally think there's no way in God's green earth that Trump's going to win Illinois, for example. So let's say that there's a lot of mail-in ballot issues in Illinois, and we got to wait for all the ballots to be counted. Well, we won't have to, because I think I can say with pretty good amount of confidence that Trump's not going to win Illinois. Now, on the flip side, I don't think that Biden's going to win Utah, let's say. And I'm just not trying to be political, just trying to illustrate a point here. If we have a lot of mail-in issues in Utah, it's not going to be a very big deal, because with just the dominant amount of in-person ballots and whatever way we go, it's not going to be an issue. Where the mail-ins are going to become an issue will be in the battleground states, such as Florida, such as Michigan, Ohio, or places like that, to where it's going to be fairly close, or where it's likely to be fairly close either way. So I think what's important right now in terms of whether we go with mail-in or whether we don't go with mail-in is that we need to have an understanding of, in the battleground states, hopefully, whatever side of the aisle you're on, I don't think anybody wants to have a long, drawn-out problem like we had in 2000. So my hope is that there's not a lot of mail-in ballots in the battleground states, just because of the fact that I don't think anybody wants that. Now, the benefit of 2000 is that we had a very stable country over the time frame that the presidency was up in the air. In the political environment that we have right now, there could be some bad stuff happening if we do have the uncertainty in 2020 that we had in 2000. So I do think there's reason to be concerned with that. And just for my right index finger is now, I normally say that's the sell finger in case I got to get out of something. I think I'm going to start calling it the 2020 finger in case I get 2020'd, meaning it's a verb of just weird stuff that seems to happen in this year. So that's kind of my thought on the election issues that we could be facing, and I think it's important that you're prepared for that, because I know I'm preparing for that now from a financial standpoint with my money as well as my clients' money. Now, in terms of what's lighting up my tape today, I feel like we're in 2011 again. Silver's going way up, Apple's going way up. And so earlier today, I'm just trying to my lines in the sand have been violated in a good way with my silver collars. I don't have near the positions in silver that I once did, but I still have some in there. So with silver, I had to do some adjustments to the upside, and we have Apple as a holding in the strategic night at RCM, but I don't have any collars or any the holdings that I had at one point. But today, I'm just kind of going through this. I'm like, holy cow! It just feels like I went back in time right now. Silver's rallying just from the standpoint, in my opinion, because of the fact that there is a lot of potential for inflation right now. The dollar is not doing so hot, and there's uncertainty and all those things. Oh, and combined with the fact that it hasn't moved, even though Big Brother Gold has been going through the roof over the course of the last few months, it's catching up to it. So combined with all those things, it's for those reasons I think silver has really been rallying recently. I had an interesting roll-up today. My silver dollar went in the money. And I can't give you exact strikes. It's actually been in the money for a little bit. I wanted to let it sit in the money for a little bit before I did any adjustments. But what do you do when you have a collar that goes in the money? Well, thankfully, I was well educated as an option trader in that I understand the rules of synthetics. So I literally closed the covered call section of it, bought to close the short calls, sold the underlying shares, and I just sold a put at the same price. I kept at the same strike price where the short call was. And so what that created was a bull put credit spread. And from a risk-reward standpoint, it is identical. Now, why on earth did I do that? Well, I have clients that had money in IRAs that we were struggling to get buying power because I can't just roll up a call. So I create a put spread. Now I got lots of buying power, and I have the same risk reward. Now, it did cost me about a nickel to do this whole trade with it, but I'm fine with that because I've freed up a lot of buying power with it. Now, what I'm looking to do is I bought a long-term call spread to where if it does continue to go up, great, we're in a great position. But if it does go down, then we're in the same risk reward that we were before. And it worked out better that way. So I'll continue to monitor this and I'll continue to do stuff on it, as Andrew would say. But it was nice to actually feel like I was back in 2011 again, having to deal with the problem of my silver collars going in the money. In terms of the market itself, we're still around the 3,300 level. So we have gone higher. We are up roughly 3% on the year in the S&P 500. And so we're gaining momentum, but it's like that we're climbing the wall of worry, so to speak. This is a very hated rally. A lot of the pundits are continuing to say how this can't last, it's not sustainable, we don't have good fundamentals, and the multiples of our beloved FANG stocks are really not doing so well, or they're very highly overvalued in a lot of ways from what a lot of people say. Well, I have two responses for that. Response number one, who cares? The market is higher. But response number two, make sure you're cautious. This is a market to where you need to make sure you don't get 2020'd. And it's very possible that you can get 2020'd in a market like this. So make sure that you're short-term cautious. What's your plan if the S&P 500 drops 250 points overnight tonight? If you don't have that plan in place, then you are really in a bad spot. In my opinion. So my advice is to enjoy the party, and who cares why it's going up? It's going up. But on the flip side, make sure that you know your exit. It's like when you go onto an airplane. I'm one of the few people, when I go onto an airplane, I actually listen to the announcements. I actually like to look to see where the exit rows are, because if the cabin fills with smoke, I want to know how many rows I have to count to get to the exit row, because I can't see it. I have my exit planned. By the same token, make sure you have your plan in place. Yes, you'll be called paranoid by your friends, but you'll be called a genius if you have your plan in place should the market go down. And if the market goes higher, you'll make just as much money and that's what I'm seeing today in this marketplace. Sorry for being a little long-winded.
Oh, it's okay. We'll allow it out here today. But you're right. It is a hated market, yet it continues to rally. I mean, speaking of that hate, I never thought I would actually be of the same mind as Mr. Meatball's buddy, Mr. Kramer, over there on CNBC. But he seemed like even he was, the permabull was pulling his hair out about this endless bullish rally. I believe this was yesterday. Sometimes the market rallies and it makes perfect sense. Then there are days like today when I can't take how stupidly bullish this market can be. He was shaking his head as what he quoted, clueless investors who ignore multiple warning signs to keep buying up stocks. This was this is Tuesday, actually. He said that on Tuesday. So it's not often that I'm of a similar mind to Kramer, but I kind of started washing my hands of this one a while ago. I just said, this one doesn't make sense. Enjoy the ride up, listeners. I agree with Uncle Mike. Take it while you can get it, but make sure you know when the hell to get the heck out of Dodge. Mr. Rock Lobster, same question for you, sir. What has been lighting up your tape over here in, once again, the endless bullish rally, sir?
I read a stat that was pretty crazy not very long ago, and how much dollars there were sitting on the sidelines in like CDs and banks and stuff like that. And I think the number was like $11 trillion, right? It was as much as the national debt, basically. Just investors having money on the sidelines and banks and dollars, just all the dollar denominated stuff just sitting there. And this was in surprise, March or April. So also, and then you look at other stats like credit card debt hasn't really jumped up. So there's been the consumers pulled back a lot. Everybody's been stuffed in their houses, So anyway, so I think part of this rally is everybody's just getting out and they're not really shopping. So what are they buying instead? They're buying stock. mean, TOSAW's been around long enough. You've been around long enough. I've been around long enough. I don't question rallies. They happen. So what I've learned in rallies, though, great time to own calls. I know, like you're like, oh, Andrew, you're a genius, but hey, you'd rather own calls when stocks are going up than going down. So vol is starting to come in a little bit. We dropped out of zone 4, which is, I think every time you drop out of a quartile or move into another quartile, for vol, it's a change in sentiment, investor sentiment. At least for now. Don't know how long it'll last, but it's significant. It has to happen in order for SPX to ultimately go higher and for VIX to go down. Vol has to go down. There has to, somewhere along the line, somebody has to switch from buying puts to selling puts or starting to write calls or do something that's more bullish with the options and like less hedging and more like, okay, we're just not worried about the market going down anymore. And that's what you're starting to see, I think, is like a little tiny tip over of that, because it's not like we're blasting through zone 3. We're kind of hanging around at a 23 VIX for 2 days now. So I think that's a symptom. One more thing is huge future premium, like the election, that war game thing, whoever, it's literally like stuff like that. Anything to sow more discontent and uncertainty to people. You got people rioting in the streets. You could die of COVID any minute. And now we're going to have the election, the meltdown, election revolts, just to add to the problems. What the heck? And then the New York AG is going to sue the NRA, and gun ownership is probably at its highest it's ever been in history. And now they're going to sue the NRA. So I think there's a solid amount of cross currents going on. But right now, I just think there's people with some time on their hands. There's people that have some money on their hands. They missed the rally, and now they're thinking, wow, maybe this isn't so bad. So I just think there's a lot of things going, moving into it. And some of the valuations are like ultra high, they are. But who knows if they're not going to be higher 2 years from now? I have no idea. But I stopped asking those questions a long time ago, and just kind of, rolling on, rolling forward.
Rolling on and rolling forward. Well, the market is doing that as well, unless you're talking about VIX. Let's start there for this not exactly super quiet day for VIX, at least from an overall movement perspective. It's moving a little bit right now, even though it is literally unched, but it has been moving a little bit. It's had a little bit of a range today, and yet that's not enough to drive any paper out there. As of a few minutes ago, there were 37,000 contracts on the tape in VIX total. I mean, if you follow this show, follow Vol Views, follow VIX at all, they could do that easily and well more just in one print. And that's the total for the day. So people, I think, are quite literally asleep right now in the VIX pit. That ADV starting to threaten the 300K level to the downside, down to about 324,000 out there right now. That sounds like a more seasonally normal VIX day in late July, early August out here than what we have been seeing of late. SPY 1.5 million, ADV about 3.75 million out there. So still a little bit of ways to go to get to about half their ADV. So quiet day in SPY as well. The S, similar story, 317,000 contracts. The ADV 913,000. So goes to show how far the S has fallen as well. Shy of 1 million contracts ADV out there right now. The Qs 569,000 contracts. The ADV just a little bit over 1 million. And the IWM at just a tick under 200K right now. The ADV about 524,000 contracts. Move on out to the top 10. Most actives cost you $1.79 to break in out there. That gets you all the way to Micron. Number 9, Uber, 191,000. Number 8, GE, $1.95 on the tape. Number 7, good old Softy, 242,000. Number 6, Roku, 262,000. Number 5, AMD. A lot of perennial top teners here today. AMD, 313,000 contracts. Number 4, Disney. Interesting one out there. They kind of report a bunch of bad numbers, pretty much. And all the analysts are like, they got a good cushion now with the streaming, so we're good. Let's rally this stock to high heaven. It's moving some options paper right now as well. 327,000 contracts. Number 3, American Airlines, 370. Then we jump up. Quite a bit, listeners. We jump up. Number 2, Facebook on the rampage today, at least from an options perspective. 712,000 contracts on the tape. Worth noting, they're on the rampage from a stock perspective as well, up 14.5 handles or nearly 6% to about 263.70 or so out there. And then, but that's even that, listeners, not enough to take the number 1 spot from the perennial number 1 or the top 10 or the big dog in the market right now. Yep, I'm talking Apple. 1.18 million contracts so far in Apple. The stock's up 9 1/3 or so, about a little over 2%, about 2.1%, threatening 450, 449, I should say, and a half. So the market's still liking all the post-afterglow. They can't sell enough iPhones, the stock split, everything else. Folks liking what they're seeing out there in Apple land out there today. Most folks actually seem to be liking the options market as well. The numbers are in. They come in right on the heels of our last show on Monday. I got the OCC folks to get them out a little bit earlier on Monday, so we could talk about them on that show, but instead we'll talk about them today, of course. What the heck's been going on in the options market for the month of July? Remember, June was the most active month in options history. More options traded than ever before since the early primordial ooze days of this business. Well, July wasn't quite that level, but pretty darn close. It was number 3. A July total volume was 615.2 million contracts. That's the 3rd highest month ever. So you've got, of course, June. I think maybe February might be number 2, February, March, and then, of course, July. It was up 52.5% from last July. Last year, if you even have to ask, July normally a pretty seasonally quiet time. So to get any strong numbers in this time of year, it's going to show you up huge net on the year. Year-to-date ADV is 28.3 million contracts, up almost 50%, 46.4% from this time last year. I've said it before, I'll say it again. People want to budge these numbers and really grow them as an industry, and certainly that is good for the industry, but what has to happen in broad society to make these numbers this high? It's a bit of a careful what you wish for scenario out here. Let's drill down a little bit. Listed options, that's where we hang our hat. Remember, OCC clears some other stuff too. The listed options volume, 611.6 million contracts, up 54.1% from last July. Equity options, drilling down even farther, 582.3 million contracts, up 62.8% from last July. That includes ETF options. That was 206.5 million. That's up 60.5% from last year. Index options, that was 29.3 million contracts, up 25.1% decrease from July of last year. So that's kind of interesting, getting back to some of the issues SIBO has been having of late. Usually it's in the VIX complex, but SPX, not exactly lighting it up over there as well. Futures, another area where SIBO has been having problems. Cleared futures volume at OCC, 3.5 million contracts. That's a 47.1% decrease from July of last year. They can't boost those numbers no matter what they do. I was going to have some SIBO folks on the network this week. Unfortunately, the hurricane intervened. We had to reschedule, but we'll get a chance to chat with them and see what they think is underpinning all this futures malaise over there. Meanwhile, it's time for us to keep on rolling. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get unusual. Before we even get to the stuff that's popping off for us today, a big talking point for a lot of you, and we've analyzed it ourselves here on the show since last week, is KODAK. A lot of you are asking, what was up? Did it seem like it didn't pass the smell test? And on the listed options side, we said no. It didn't seem like there was a lot of really untoward paper out there. And then a lot of you said, look at the Form 4 transactions, which are what the insiders were up to. And we looked at that on our last show, and that didn't seem as kosher. There were a lot of very sizable allotments of options at very favorable strike prices the day before all this announcement went through. And that doesn't usually pass the smell test. Now, in my experience in the past, we've seen these type of things, and usually there's a pretty good paper trail covering that. In this case, Kodak was arguing that this was to adjust for some convertible note that they had issued, and just happened to be bad timing. Didn't have good optics to it, but usually they have enough wherewithal internally to cover their butts in times like this. And yet it seems like, from subsequent investigations, the SEC now is on the rampage for this. SEC is looking into this. And apparently, at least according to Reuters, there wasn't the robust paper trail you might assume. In fact, this readjustment of the options packages for the CEO and others was part of a quote-unquote just understanding that they had with the board, and there wasn't any documentation for this ahead of this massive grant on Monday. So that sounds a lot more dubious. And now, of course, politicians like Warren, she usually has the bit in her teeth for this kind of thing. She's been all over this. So it seems like the folks at Kodak may not have heard the last of this one. Mr. Rock Lobster, what are your thoughts here on the web continues to grow and get more entangled over there in Kodak, sir?
Anytime you see anything like this, so the chairman, he has the stock options, right? The stock blows up, but that doesn't mean he can do anything right at that moment with it, right? He would have had to exercise and sell at the top, which I think would have been hard to do.
Yeah, if he had turned around and bought some puts immediately after that would have been very impressive, right? Or if he had just dumped it all, that's what.
Yeah, I don't think a CEO can buy puts on their own company.
Yeah, exactly.
I think that's kind of a no-no, which I agree with. I mean, you're kind of, I think you should be sort of in there. You know what I mean? But anyway, what I would say on that one is, it doesn't pass the smell test, and it doesn't. I mean, how do you, there's no documentation. I just get whatever. It's like, I think the problem with these CEOs sometimes is they're just, they're a little greedy. I not normally would say that, but you got a lot of workers, you got people out of work, and now if he negotiated this package, then he negotiated the package, obviously, and he's keeping things running. So, I mean, that's a good thing, but maybe he's worth some money by being able to do that. But I think for the most part, it is a little smelly, but it will probably be nothing because the guy couldn't cash out of it. It's like, okay, I got these options, but they're sitting there and I haven't made any money. So, what are you going to do? Ultimately, I think it only is a problem if you sell everything out, like right at the top, then that he's going to have some fishy problems.
Well, the stock is still higher than, I think the highest strike price they gave him was $12. Stock's at $16.30, up about $1.30 today. So he's still north of all those handles. Obviously not anywhere near as far north as he was a week ago. But still, he's still looking good on all this deal. I assumed when I saw that those grants or options, I assumed perhaps a higher degree of competence on the behalf of the CEO and the board that they would cover their butts better than perhaps they did. So, hey, take them to the woodshed if they are going to pull this kind of obnoxious, shady nonsense. If you're going to do this and it's so blatant, you got to at least be deft about it. It doesn't seem like they met that minimum standard out there. Let's move on to what our odd block sniffer, a.k.a. the Eye of Sauron, what it's sniffing out there today. First off, our first stop here is AerCap Holdings NV. This is the world's largest aircraft leasing company. Ticker symbol AER. Trading today, $29.82, off about 73 cents, or about almost 2.5%. This is the name that had a pretty staid year up until the big tumult. It was trading about 52.5. Seemed like it stayed mostly in that low to mid 50s. Got up to around 60, a little bit north of that, right before the big sell-off here. So it had a general drift higher heading into February. Peaked out at 62.60. Actually, intraday was about as high as 64.86 back in mid-February or so, and then it sold off hard down to 15 and change on March 18th. Got as low intraday as 10.42. So they took a big drubbing from a 60 roughly to 10.42 in the span of not too long. So they felt the heat pretty hard. Obviously, aircraft demand fell through the floor and still hasn't really rebounded. The name popped a little bit after that. Got up to about 25 again pretty quickly by March 25th. So it had more than doubled again. Then it kind of sold off again, bound to 18 and change. Had a lot of fits and starts before topping out again right about 40 even again, on June 8th. That's an interesting day. That's a day for a lot of our names that peaked out there. And outside of these big FANG names that continue to go up, a lot of the names we profiled on the odd block for the last few weeks, all of them pretty much saw their recent highs on June 8th and haven't really come anywhere close again. This was $40 on June 8th, and they pretty much sold off ever since. Right now at $29.86. So interesting things afoot there on June 8th for the rest of the market, outside of the big FANG names, which just no limit to the upside out there. So interesting stuff. That's where we find ourselves in AirCap Holdings. Let's see what our Eye of Sauron found out here. Looks like it's a 10,000 lot, listeners, of the SEP 22 half puts going up for 45 cents. These are pretty much almost exactly mid-market. The market was 30 cents at 55, so a little bit better than those puts we profiled last week that I believe were, no bid at like 45 cents, something ridiculous like that. So these are 30 cents at 55. This went up on the Philly for 45 cents, 10,000 times. Worth noting some more came in after that to a total of about 15,000 on the day. Given where this chart is, this has the width of probably a line in the sand to it, but it could be, actually that's a pretty favorable sale if that is the case. So they could be hedging themselves maybe a little bit at the 22 half level. That is roughly 2x where they bottomed out on that mid-March sell-off there. So it could be a bit of a somewhat pricey hedge. They get out to September for that, though, so not too bad. And it's a strike that's pretty far below the market as well. So in terms of protection, you're giving up a lot. There you're giving up roughly 7 handles out there in the market right now. So it's an interesting choice if that is indeed the hedge, which is why I kind of lean towards line in the sand. But I'd be curious, Mr. Rock Lobster, what does your spidey sense tell you? What do you think this one is, sir?
This one feels I think doesn't this feel a little textbook to you, line in the sand put?
It does.
That's what I was looking at it. I'm looking at,
it's a good price they sold it for, but other than that, everything else makes it feel like it's a line in the sand, yeah.
Well, this is one of those, you tend to see the line in the sand puts in the value stocks, right? So this aircraft leasing company, right? They're, it's not like they got problems, but they could have some serious cash flow problems. It sounds like they got a lot of cash in the bank to overcome the short-term problems. This was at a $60 stock. This looks like an excellent value play. It looks like a textbook. Actually, I like this a lot, to be honest, because I think the world will get back to normal. I don't think it gets back to normal in 6 months, but the equity market sure thinks it's going to get back to normal pretty fast. And I think this is just one of those plays where, this is line in the sand. It's a value play. Earnings came out. So, I think people were still making payments or whatever. And I think right now you think, well, if you think the airlines are going to start to improve marginally as time goes on, quarter after quarter after quarter, the stock is a scoop. So I think somebody's selling these puts, taking the money, or they'll be happy to take the stock at 25. But it does look like a deep value play to me.
It shows how crappy some of these markets are, where they're showing a 30-cent bid and someone actually is willing to pay 45 cents for 10,000. That's a pretty crappy market. But I digress. Let's move on to our next name out here. This is Camping World Holdings, ticker symbol CWH. This one's lighting up the tape today across the board out here. Trading right now $34.65, off $7.70, or a little over 18% out there right now. This is the name that a year ago was about $10. So they've had quite the run. Of course, everyone and their mother, I have to say, even myself, when all this madness started happening, I started thinking about, hey, maybe we need to rent an RV just to get out and do something this summer, because otherwise you don't really want to stay in hotels, you don't want to fly and all that kind of stuff. You don't want to use road service station rest stops, so maybe an RV is the answer. Apparently the rest of America got that memo too, because the stock was still around, actually it was about $16 going into the big sell-off in February. Then it bottomed out around $3.40, so it took a big hit. Then all of a sudden everyone said, wait a minute, people might want these things. It turned right around from $3.40 and just has been on the rampage ever since, topping out recently at $42.30 back on the 5th, and now it's been on a bit of a downswing, including this earnings. They're just they're coming for it today. We have the earnings move and earnings move result report up there on the website for it right now, theoptionsinsider.com. Let's see. They were pricing in at the time of this report. They reported after the bell last night, listeners. They reported they closed at 42.29. They were pricing in 12.1% move, and they actually delivered at the time 15.6%. Right now, it's over 18%. So they have dramatically outperformed to the downside here. One of the few names that's blown the way at straddle out here. It's not exactly a frequent occurrence this cycle. I talked about that with Matt, the producer of the ORATS reports, yesterday on the advisor's option. Look for that coming on the network soon out there. In fact, speaking to Matt, according to him and his ORATS rankings out there, Camping World Holdings is the 4th place today for overall volume versus its 20-day ADV. It's about 4.1 times its normal volume right now, with about 34,000 options on the tape as of the time of this show. And what did our Eye of Sauron found? Well, it also found some fun out there in Camping World Holdings. It was, let's see, the AUG 20s. The AUG 40s. Expiring this August of 2020, going up for $1.40, so nice and juicy, but still below the bid. These things are bid a buck and a half at $1.60, so nice tight market. I guess all that flow going up after the earnings was keeping things tight over there. They went for $1.40, so below the bid, 8,351 times. This went up, looks like over there on Amex, perhaps. Earnings next cycle is not till November, so this is obviously not a next cycle earnings play. This is a this cycle earnings play. Someone coming in and getting all the juice they can for these AUG 40s. Seems like that was a savvy do, as they like to say, because this stock hasn't really looked back on this. A total of about 13,000 have traded on this strike on the day. So that could be more people flocking into this trade, or it could be just that strike was pretty hot, because it was pretty much the at-the-money strike not too long ago. So that's probably a lot of just post-earnings flow going in out there. But either way, someone, Mr. Rock Lobster, seems like they're crushing this strike pretty hard and trying to get all the juice they can for these AUG 40s out here. That's your take as well, Mr. Rock Lobster?
Yeah, the stock's about $35. It feels like kind of a good buy rate. I don't know if I want to buy the stock. It looks like a better buy rate now than maybe when they did the trade. But there's still some hefty juice in that option. 100 vol after earnings. I would say that is conspicuous, right? The AUG 2135 straddle is $5. I don't know. That feels priced to me. I mean, so yeah, I think it is a decent post earnings sale, especially if you still own the stock. You might as well, and it gets you kind of back to where you were. Like 41.5. So it feels like for somebody that owns this stock, it's kind of free money, because it just puts you right back at the opening price. So, and that was oh my word, this was a $5 stock in mid-March.
I know,
$5.
I know, got down to 3 and change. So. Everyone's talking, Bitcoin, all these other things that have exploded. Apple, certainly they merit it, but Camping World Holdings may be the bell of the ball here.
Gaming was $4.50, right? Pink Gaming was $4.50. So I think whoever sold these, it looks like just from how things are priced that they bought the stock much lower, and it's like kind of a free money trade for them. So
yeah, that's a win. Looks like somebody's got
I will say fortunate buy rate. A fortunate buy rate.
They got off 761. Someone did for $1.83. So they got some juice on these bad boys. Yeah, that's a 90. Was that a 96 vol? Looks like they're printing around for 98 cents or so now. So much less than they were. Either way, that buy rate looks pretty good. I don't know if we need to watch this one. That's pretty much going to be a winner, I think. Either way, even if they break through 40. I'm sure this guy, if he got it around 3 or 5 or anywhere in between, he's probably not too sad to let some of these bad boys go out here. And it's time for us to go into our next segment, which features you guys. It is time for the Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right. A lot of you folks chiming in with your Q's. Let's see if we have some A's for you. First up, frequent questioner Scott Somer, also frequent worrier about the meatball. He sends us all sorts of weather reports about Austin all the time. He's very concerned that the meatball is moving into some sort of a weather cauldron down there, I suppose. But This time he's asking, are option exchange trading floor statuses as follows? SIBO, yes, with partitions and proper personal spacing. And the Amex, same as SIBO. ARCA, same as SIBO. And NASDAQ, the Philly, no floor trading, electronic only. I do believe that is correct. I'll have to check on the Philly, but all the other ones sound pretty much the same deal out there. SIBO, of course, in the process of perhaps considering having to shut down again if things get more dire here in Chicago. Right now, we're not at that threshold yet, so things are good, but they're talking about revisiting the virtual floor yet again out there. They talked about it on their recent earnings call. So this is subject to change here, Scott. This could change at a moment's notice. But for now, I do believe that is the status for all of the major floors. The Q there, the question mark, I believe is Philly. But when you talk about in-person floor, that new quote-unquote floor they did wasn't exactly huge. So you're not talking a lot of people out there. Anyway, interesting comments next here from our friends over there at Genesis Volatility. I know they're friends with the Meatball as well. They're on our Crypto Rundown show earlier this week. And Uncle Mike, they were tweeting out some interesting stuff. They tweeted out the at the money September vol for SLV was 66%. And the at the money September vol for Bitcoin was 65%. And they tweet out what they say. These options are priced in the next 45 days of vol, but one of these assets has rallied from sub 0.01% to 20,000 in 10 years. The other hasn't. And then we had a listener chime in on that, say Avi Fellman saying, looks like SLV is overpriced to me. So what do you say about Uncle Mike? You're kind of our resident SLV defense force. What do you say to the Genesis folks who think maybe the vol is a bit overdone in SLV, at least compared to Bitcoin? And Avi Fellman, who says he thinks SLV is overpriced. What do you think, sir?
Well, in terms of the vol, these options ain't cheap. I just did it. Well, I talked about it a little bit earlier in the show today, but these options are not cheap, to say the least, and that there's definitely a lot of vol in silver. The one thing I would say in terms of the vol and the movement, I've always described silver like a thief in the night. So whenever I'm doing like an annual review with clients, typically you hope that the stock market moves up kind of in a diagonal fashion. If you look at a chart, meaning it slow and steady, but it is consistently to the upside, hopefully on average of 10% a year. And then over time, you get whatever rate of return you're looking for based on your asset allocation, whatever the case may be. Silver works different than that. Silver is like the triple option in football. They'll bore you to death by running the dive every play, but then all of a sudden when you're least expecting it, they'll throw a deep pass and fool you. And so silver kind of works like that, in that it's boring, it does nothing. Then all of a sudden, just like a thief in the night, it just rallies. It goes from the 10s to the 26s in a couple months like it has. And so in terms of the volatility with it, I would say it is somewhat justified right now because of that. Is silver overvalued right now? I think that we could have some potential resistance at the 26-27 level, just because of where some bottoms were made about 8 or 9 years ago. So you could make a case for that. But the one thing to expect with silver is that you really can't expect anything with silver. And so what I'm preparing for right now, or the way with which I set up my position in it today, like I said, I don't have near the exposure I once did to it. But what I did with my positioning on it today was I actually set it up to where I think it could go higher. But if it doesn't, we locked in a pretty good amount of profits on it. So I think that it could go higher. And the reasons I think it could go higher are just because, number one, it still has a long way to go to match near all-time highs like gold has done recently. And number two, there's a lot of money printing going on when you with the Federal Reserve, or with fiscal policies, or the federal government, whatever way you want to look at it. And whenever you have more of something, the value of it goes down. So ultimately, with all this money printing that we have going on, you could make a case that's been happening since the beginning of time, Mike. Well, yeah, it has, but we're really doing a lot of it lately. And when the dollar goes down, oftentimes the value of silver can come up. So I think for those reasons, there could be some more upside to it. But there's a lot of uncertainty and fear, hence the high volatility on it. So hopefully if you're trading it, you know how to use spreads.
Indeed. So I guess the question for you out there, listeners, 66 vol roughly, would you rather have SLV or would you rather have Bitcoin? Which of those assets you think merits that vol more out there? And I'm curious to hear your thoughts. Speaking of thoughts, J4340, he's chimed in a few times in the past. That name looks familiar. He says, where's the podcast on Monday's option block? I can't find it on Google or on your app. I only caught part of the live show, and I need my fix. Thanks for the inspiration and entertainment. Jay, you pointed out other people did too. It looks like there was some hiccup with the network feed and getting OB'd. It was uploaded fine to the option block feed. So if you subscribe to the option block directly, you got it no problem. But for some reason, it got delayed on the network feed. It's there now. See, obviously, you guys all got it, but it might have been a few hours later, a day or so late. So apologize for that. That's the case. It was just some weird behind the scenes. So if you were confused why you didn't see your OB at your usual time, other shows were hitting before it. Something got gummed up in the distribution chain out there. But it's there now. You can enjoy it. And, of course, you can always get us live if you want to ensure you get it in your ear holes right away. Tesla is always top of your guys' brains out there. We were talking on the show not too long ago what the heck was going on with them and the big moves with them. We had EBITDA 3, maybe he's an accountant, saying they beat their delivery numbers next quarter, possibly in the black with China sales. So interesting. He thinks he's a little bit of a bull on Tesla. We talked on the show, Mr. Rocklaps, I think you recall this. This was back when those July 3500s were lighting up the tape in Tesla, and we said, what are they charging out there for margin to sell these ridiculous options? And Shorty Momo, he just wins isn't that the character from Phineas and Ferb? It might be, but sounds familiar. But I like the handle either way. Shorty Momo says yesterday, TW. I'm not sure which broker. Not TD Ameritrade. I'm not sure which one TW is. TW charged me a mere $120, but it spiked to a still mere $140 during what he terms the power hour. I'm assuming that means when it really rallied to the absurd levels, but still nowhere near 3,500. That seems relatively slight to me. Mr. Rock Lobster, what are your thoughts on what they're charging here? And what the heck broker is TW, sir?
I don't know. I don't know, to be honest. Only $120 for selling that option? That sounds light to me.
Yeah, that seems pretty cheap.
I mean, I know it's way out of the money, but I don't know what they're sliding. But even that, I still can't believe that would cost you less than they would charge you at least $1,000 on selling a call for $1.50. That far out. I'm trying to think about retail margin like that. Isn't it usually like the strike less the premium and 50% of that? So, it is quite a bit out of the money. So I'm just half, even that, I don't know. I still can't believe it's under $1,000 per one lot. But
maybe that's why we haven't heard of this broker TW, because they're not going to be around very long if they're allowing margin on those kind of ridiculous sales like that. But hey, I'm glad you got a bit of a bargain. It sounds like you got some of these off. So congratulations to you, and good handle there, Shorty Momo. Other people obviously have Kodak on the brain. This comes from The Alerter. We were talking about, all the crazy moves on it not too long ago. Other people chiming in saying they're going to be investigated for insider trading. That certainly is indeed the case right now. So that came to pass. And The Alerter is saying, funny, the price of Bitcoin was part of why I thought Kodak would spike. And he goes on to say, these trades should be looked at, but these guys own most of their own shares anyway, 65%. So I am not sure about them violating the SEC. Seems to me it's mostly pissed off people who lost money on this one. Well, sounds like the SEC may disagree there, The Alerter. But, these guys own shares, obviously, and now they own a lot more at very favorable strike prices. So that's going to be enough to flag some interest out here. Oh, let's see. Let's go one more. Just a quick comment here from The Bicyclist. We were talking about JetBlue having massive quarterly losses on the network not too long ago, and he chimed in to say, too many airlines and planes, not enough customers. Some shakeout is in order. Well, clearly the market agrees with you. They've been coming for all of these things of late. As we're coming for our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is the portion of the show where we tell you what we're watching for the rest of the week. And before we even get to that, Mr. Rock Lobster, you did a little homework there in the interim. What did you find for the actual Reg T margin cost for selling those calls over there at TOSAW, sir?
Yeah, it's 15,000 per contract.
Yeah, exactly. That's what I expect, not whatever. I'm not sure what he was quoting us, but if that's true, then he got the bargain of the century, A, and B, that broker's not going to be long for this world.
They are not going to be long for this world.
So good bit of homework there, sir. And aside from that, what are you watching for the rest of this week, sir? Until at least vol views tomorrow.
Oh, wow. Apple's only $50 away from 500. So what is that? Every 1% move for Apple now is $4.50. So it's not very far away. I'm just saying. Split's coming. I don't know. I just think on a goof it goes to 500 before the split on just the crazy that's going on right now. So again, I don't fight the crazy. I just embrace it and just try to find a trade that works if it gets it. That's all. I want to see if we could actually get VIX to move. It's just glacially moving, and mostly just I think because the S&P 500 is slowly going up, and I feel like it's sort of like whack-a-mole. Like the market sticks its head out, and then there's bad news, and it hits the ball on the head again. It pops its head back out again, and right now I still think we're in that phase where clearly people that are investing are looking past COVID, 100%. We've had these spikes. The spikes look manageable, at least I believe from the market's point of view. Gosh knows what's going on because people say different things every day, and we'll see what happens. But as of right now, there's trillions of dollars sitting on the sidelines. Tech has pretty much carried the market, and I mean, look, you can tell there are tons of stocks that are way, 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 way off their all-time highs. Banks, oil companies. Main Street stocks galore. If people they start going back to work again, this whole thing, remember, is all that money kind of pumped in, could take off. That's what the market, I believe, is looking at right now. So just the question is, if vol can get down to a lower number where I could believe more of the rally, so to speak. So it's not quite there yet. I'd like to see breaking through zone 3 to 2. So that would be a sub 18 VIX. And it's poking around down there, but not there yet.
Yeah, I think there's more analysis to be done on that June 8th date and how a lot of these names that are smaller that we're profiling in the odd block seem to have reached their apex then and then have sold off pretty markedly since then, whereas this small consortium of FANG names has continued to lift everything else up. I think there's certainly something interesting to analyze there in that dichotomy. Mr. Uncle Mike, same question for you, sir. What are you watching for the rest of this week until we can gather here together on Monday, sir?
Well, non-farm tomorrow, so I'll be all cuddled up with my smartphone at 7:30 in the morning, seeing what happened with that, and just wanting to see just watching the news, how it changes every hour on the hour, it seems, almost, and seeing how we need to react to it. I believe that I'm bullish, but I've never been more cautious in my life.
I like that. He's bullish, but he's never been more cautious. That should tell you something in and of itself there, listeners. And unfortunately, that music tells you that we're out of time, at least for this fine program. But if you need a little bit more in your ear holes, I won't hold it against you. I won't blame you. Stay tuned if you're listening live. We'll pump some fun stuff in the live stream. We'll be back in exactly half an hour with Twifo. We'll have Mr. Sean holding down the footsie seat. I think we have the once and future Dr. Bix on the CME hot seat. Going to talk a lot of vol and a lot of other fun stuff. So if you're interested in that, maybe Silver making an appearance there too. Other fun stuff. Stay tuned for Twifo in a half an hour. If you listen after the fact, just sit next. Should be there waiting for you. Before we go, let's go around the horn. Let's start with the rockingest of lobsters, Mr. Rock Lobster Surf. I am intrigued. I want to learn more about what you guys are talking about. Where should I go? What should I do?
Going over to optionpit.com. Mark will be doing a webinar for our trading legion. Doing great with trades, learning how to buy options, manage the option position, understanding how all that works. A full year-long subscription to learning how to trade options from the long side. We also do it from the short side and other classes, but this is strictly kind of how to buy options, how to manage the positions. For, if you're like TOSAW, a crazy market, a little, if you want If you want the upside exposure but not have all the crazy risk, you take a class like the Trading Legion from Option Pit and you learn how to do it. So anyway, we have all the trades out there. We got a great record for this year. Learn as you go, and great opportunity. So there you go. OptionPit.com. Go to look at our Trading Legion on our membership area.
Maybe you two are bullish, but maybe you want to be a little cautious. OptionPit.com. They can teach you how to do that over there. OptionPit.com. Join the Legion. I think is their new tagline. If not, I just created it. And Mr. Uncle Mike, sir, if folks are intrigued, maybe they too are bullish but cautious, and they want to learn what the hell they should do. Where should they go? What should they do?
stcharleswealth.com. Give me a call, and I'll be more than happy to have a conversation, because there's a lot of reason to be bullish, but there's also a lot of reason to be cautious. How do you walk that fine line? Give me a call. I can discuss.
We'll discuss. stcharleswealth.com is the place to go. And on behalf of the Unklest of Mikes and the rockingest of lobsters, and indeed myself, thank all of you out there for downloading, streaming, subscribing. If you just listening to this one, we'll see you later. If not, we'll see you back in a little bit for Twifo in a half an hour. Then we'll back again tomorrow for more fun, 1 p.m. Central, with Volatility Views. And we'll see you back here on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.